Is altcoin season really over?
It's over now.
Or is the last week just the shakeout before a surge? Over the past 7 days, the crypto market has seen major volatility, liquidation, and rotation. In this video, we'll break down what's happened, why it matters, and where things could go next. The broader crypto market has endured a sharp pullback. Bitcoin is down around 4 to 5% this week and has repeatedly failed to break key resistance near $118,000. Ethereum has struggled even more, dropping below $4,000 during the week. Altcoins suffered the most. Solana, XRP, Cardano, and other majors bled between 8 and 20%, and smaller alts were hit even harder, with many down double digits in just a few days. Derivatives markets were the real story. More than $2.5 billion in leveraged positions were liquidated this week alone, $1.5 billion in a single day, most of it from long traders who assumed the Fed would be dovish. The cascade was brutal. More than 400,000 individual accounts got wiped out as margin calls triggered domino liquidations. So what caused this? Was it just bad luck? Or a perfect storm waiting to happen? There were several key drivers. First, triple witching in crypto options. Over $17.5 billion in Bitcoin options and $5.5 billion in Ethereum options expired this week, creating huge volatility. Second, technical weakness. Bitcoin had already tested resistance near 118,000 multiple times without breaking through. Each rejection built up selling pressure and made traders nervous. Third, the Fed factor. On September 17th, the Federal Reserve
decided to lower our policy interest rate by a 1/4 percentage point.
Exactly as expected. But instead of cheering, markets tanked. Why? Because Chair Jerome Powell struck a hawkish tone. He called it a risk management cut and emphasized that policy would remain moderately restrictive. Fourth, psychology. Traders had already priced in the cut and were hoping for more. When Powell did not deliver, it triggered a classic buy the rumor, sell the news reaction. Finally, over-leverage. With so many traders positioned long, the sudden shift in sentiment sparked a liquidation cascade that snowballed. This wasn't random. It was a textbook case of overhype meeting reality with a dose of historical seasonality making it worse. September has historically been one of Bitcoin's weakest months. Since 2013, Bitcoin has posted negative returns in 8 of the last 12 Septembers, with an average loss of almost 4%. This year is no exception. The sell-off fits perfectly into that pattern, earning September the nickname Rectember. As prices fell, Bitcoin dominance spiked to over 58%, showing capital fleeing from altcoins back into BTC. The altcoin season index is currently around 70, still below the official threshold of 75 that signals a true altcoin season. But here's the twist. Historically, October is one of the strongest months for crypto. Average Bitcoin returns in October sit around 23%. In each of the last 3 bull cycles, a weak September was followed by a powerful Q4 rally. So yes, this week was ugly. But the bigger question is, are we about to see history repeat itself with an explosive October? Despite the pullback, a constructive thesis remains. 3 pillars could drive a strong rally in Q4. First, institutional inflows. Spot Bitcoin ETFs have already been a massive success, with assets under management nearing $180 billion globally by mid-2025. Analysts now expect altcoin ETFs for assets like Solana, XRP, and Litecoin to get approval soon, with odds above 90% before year-end. This could open the floodgates for billions of dollars to flow into altcoins via regulated products. Second, liquidity from the Fed. Despite hawkish language, the Fed's own dot plot still projects at least 2 more rate cuts by the end of 2025. Historically, easing cycles have been rocket fuel for risk assets like crypto. Third, historical seasonality. If history is any guide, the September shakeout often sets the stage for October through December rallies. The setup today looks very similar. Weak September, but potential macro and institutional tailwinds for Q4. Of course, there are risks. Over-leverage remains an issue. While some leverage was flushed out, futures and perpetual markets are still stacked with risky bets. The macroeconomy is another risk. Weak economic data, potential recession signals, or global shocks could pull crypto down alongside stocks and tech. Key technical levels are also important. It is crucial for Bitcoin to hold above the $100,000 level, as a breakdown below could open the door to much deeper declines. Finally, altcoin fragility. Many smaller altcoins still depend on hype and speculation. Without strong fundamentals, they remain vulnerable to deeper corrections.